are many interesting things about the chapter 2, and one of them is about doing the arbitrage, right? Do you guys remember? So arbitrage is more like the investment strategies that you can employ or use in the exchange markets. Okay, so by definition, it is the strategy that is used by traders to profit from the price differences in different markets. Okay, for example, a trader might purchase a currency at a lower price and in one market and sell it at a higher price in another. Okay, and then he can pocket the profit that comes from the price differences from these two markets. Okay, and the basic mechanics of the arbitrage is as follows. First of all, you want to identify the price differences between two or more markets. And then you purchase the currency where it is undervalued and sell the currency where it is overvalued. Okay? Now, let's assume we have the euro that is short for EUR, that is trading at 1.45 USD in New York. And the same euro is trading right now at 1.49 USD in the London market. So when you compare these two numbers across these two markets, you can see one is 1.49, which is higher, and the other one is 1.45, which is lower. So it seems that the same euro is more pricey or more expensive in the London market than it is in the New York market. Okay? And because you notice there's a price differences, then you can take the advantage of that price discrepancies. Okay? So the way to do this is you can buy the euro in the New York at 1.45 and then bring that to the London market and sell that for 1.49 USD. Then you can make the profit of 0.404 USD per euro, right? So that's how you can do the arbitrage. Okay. Now, when it comes to this kind of investment strategies, we normally have two. One is called the spatial arbitrage. This means that we act to profit from the exchange rates differences that prevail in different markets. And second is the triangular arbitrage. This means that three transactions undertaken in three different markets and or in three different currencies in order to profit from the differences in prices. Okay? So using the same example, we can apply with the spatial arbitrage, okay? Which by definition means that there are price differences arise from geographic dispersed markets, okay? That because the name has the spatial means the space, okay? And then so if we use the same strategy, and this means that we can exchange 1 euro for 1.45 USD in the New York markets, while it can be exchanged for 1.49 USD in the London market. Okay? In such case, the euro is cheaper in New York and it's more expensive in London. So therefore, a trader can purchase the euro in the London market and then sell it, right, in the London market to make a profit. Okay, so let's assume you have 1 million euro to start with, right? then you can have you can purchase 1.45 million USD, right? And then immediately sell that in another market for 1.49 million dollars. So what would be the difference? The difference is about 40,000 USD. That's how much profit you can get. And if you want to convert it into the percentage, you just have to take 40,000 divided by the principal, which is 1 million, then you can get 4%. So that's how you can make money, get a return from one time transaction. All right. So then, so that's the good example to apply the arbitrage, the strategy. Okay. So why don't we just work through another example so we have a better understanding of this. Okay. So example 1. So in the Taipei markets, 1 USD can be exchanged for 31.6 New Taiwan dollar, right? And in the New York markets, 1 USD can be exchanged only for 29.81 New Taiwan dollar. Okay? So since the New Taiwan dollar is cheaper in Taipei, a trader can buy the New Taiwan dollar in Taipei and sell that in New York for a profit, right? So then we can start with 1 USD first, okay? So starting with 1 USD, then you can exchange for 31 New Taiwan dollar in Taipei. Now you bring the money to New York, right? Where you have the new interest rate, right? So then, 1 unit of New Taiwan dollar can be exchanged for 0.033 USD. Okay. Then you can sell the 31.6 New Taiwan dollar in New York to obtain about 1.06 USD dollars. Okay. Now, remember, you start with only 1 new US dollar, okay? And then you end up having 1.06 US dollar, okay? So you take the difference between the two, then your profit becomes about 6 pennies, right? 6 pennies, okay? So this will actually translate into the 6.04% profit. And so this is how you can that's how you can make money in the foreign exchange rate using the arbitrage. That's correct, right? And make the 6% profit, right? So, and the profit is good because when you look at the bank deposits, right, in Taiwan, it will be far less than 6%, right? So, and if you want to have more profit, you just have to engage with more transactions, right? Or you can increase your principal as well, okay? Either way, okay? So this is just to give you a review, okay? While we wait for other students to come in, okay? And then we also talk about the triangular arbitrage, okay? Which by definition involve a third currency and or market. So such opportunity exists if an observed rate in a non-market is not consistent with the cross rate, okay? So again, any profit opportunities are likely to be arbitraged away quickly, meaning that the cross rate are, for the most part, will be consistent with the observed rate eventually down the road, okay? Now, let's assume we have the following example. We have the exchange rate in Taipei for the euro, and also we have the cross rate for the between the Japanese yen to the euro is about 131.99 Japanese yen per 1 unit of euro. Okay. So, so we noticed that at the same time in the Tokyo markets, the exchange rate for the Japanese yen to a euro is actually 129.5. This implies the value of the euro is actually underestimated in Tokyo and it's overestimated in Taipei. Therefore, one can purchase the euro in Tokyo and sell them in Taipei for the arbitrage. Okay? So imagine we have a person which is the arbitrager has the 100,000 USD. The arbitrage steps he can take out as follows. He can first exchange the 100,000 USD for 11,000, actually 11.374 million Japanese yen in the Taipei markets. And then in the New York market, he can sell that and to purchase 87,000 euro, right? And then he can bring the money to Taipei and sell that to obtain about 101,000 USD, right? So his principal was 100,000 USD. Now, through the transactions, he actually have more than that. So the difference is about 1,927. So that is equivalent to about 2% return. Okay. So as long as he does more of those transactions, or he increase the principal, then his profits will become more considerable, right? All right. So just like what we did, let's go with one example here. So the example here is we have the British pounds, right? And we have the China yuan, and we also have the USD. Okay. Now let's assume the British pound with the USD, the exchange rate is about 1.7936, and then the China yuan to the British pound is about 6.54, right, in London. And then we know the third condition that the China yen is trading for 3.78 per USD in the New York. Okay. So first of all, we need to find. So these are the table rate. Okay. These are the observed rate. And then we want to calculate the implied rate, which is the cross rate, right? And just to compare if the cross rate will be different from the table rate, okay? If the numbers are different, and especially the numbers are big, that means we can take the advantage of the price differences, right? And if the numbers are small or maybe similar, then we can only give up on the opportunity, right? So the cross rate between the Chinese yen and the US dollar in London, so it's about 3.6514, right? How do you get that? We take the China yen to the British pound and divide it by the USD to the British pounds, right? To arrive at that number, right? And this number represents the number of units per 1 unit of the USD. So given we know the cross rate is about 3.6514, and then we know the rate, the table rate in New York is about 3.7826, right? It's clear we see the price difference, right, between these two, as you know, because we have these two numbers, right? And the number is quite big, right? So this suggests the arbitrage may be possible, as there is a discrepancy between the London cross rate and the actual London rate. Okay. So in a sense that the Chinese yen is cheaper in London, which is sitting at 3.78, right? And the Chinese yen is more pricey in London, such as sitting at 3.65. So the number is higher in the New York, right? So and this means the China yen is actually cheaper. So we buy low and sell high, right? So that's why we buy the Chinese yen in New York, and then we sell the Chinese yen in London, okay? So that's the very first step, okay? Now let's implement the arbitrage. So the step one is that we start with 1 British pound. We convert through the triangles, right? Going from the British pound to the US to the China yen to the British pounds, and see if you can end up with more than $1. Okay. So step one is that you convert the British pound, and then you can have 1.79 USD, right? And then you can purchase, right, the Chinese yen with the amount of USD you have. So then you have 6.78 Chinese yen. Then you would sell the Chinese yen, right? And what would you get? You would get the British pound, right? And how much British pound you can get will be $1.036, right? Which is clearly above 1 British pound, right? So you have some profits. So if we look at this in a nutshell, so you start with $1, the British pound, and then you end up with 1.0359, right? The profit is about $3, is about 3 penny, right? And in the percentage, it's about 4% return. Okay, so this is how you can pocket the profit by using the arbitrage, right, strategies. Okay, so remember, it's always buy low and sell high, either in the capital markets or in the foreign exchange markets. All right. So that is just only one example. I have so many other examples to show you, but then I think you guys are familiar with the strategy right now. Okay. Any other questions? No. Okay. And then other than that, what else do I want to show you? Okay. And this graph is quite interesting because this will shows you that over time, what will be the holding of the global currencies, right? Over time, okay? So as we mentioned before, the biggest holding globally is always the USD, right? And then somehow we can see the Australian dollars, right? It's kind of moving up and kind of going down. Okay, so this shows that despite the USD is taking some share of the euro, okay, but because the Australian, they have some of the minerals, right, some of the materials that Chinese people really want. So this actually make people want to hold the Australian dollar as one of their international reserve.
Also, the interest rate on Australian dollars is very high relative to other currencies.
Exactly. Yeah. So nowadays we will talk about the U.S. interest rate, the UK interest rate, and also Australian is something we cannot ignore, right? In today's platform. Okay. And other than that, I think I have shown you the graph right?
Mm-hmm.
The trade volume for Taiwan from 1995 to 2001, right?
Mhm.
As we mentioned that the Taiwan is the export-oriented economy. So you can see the Taiwan keep pumping up the trading volumes, right? It's more and more, right? It's higher and higher. The only time stop was during the financial crisis 2008,
Mhm.
right? And after that, it keep going up. Okay, so this actually would be consistent with Taiwan's effort to keep pushing its exports, right? And so we can see on the news that whenever there is the slowdown in the exports, it seems like the GDP can be affected, adversely. Okay. All right, and then the other one I want to show you is about top 10 financial centers.
Mhm.
So when we talk about financial centers, right? What are the characteristics? What are the attributes we have assigned to those financial centers?
Mhm.
To begin with, for example, when we talk about financial center, what countries are we talking about?
U.S.,
We talk
UK.
about US, UK,
France,
France,
Germany,
German,
Japan.
Japan.
Mhm.
What else? Any
Any newcomers are Dubai.
okay, any city in Asia?
Mhm. Seoul.
Seoul.
Seoul is South Korea.
Okay. And what about Hong Kong?
Of course.
Of course.
Mhm.
Okay.
Singapore.
Singapore, right. And we know there has been a little bit, competition between Hong Kong and Singapore over these years, right? All right, so when it comes to the financial center, the textbook provides these characteristics, okay? And so take a look and tell me which one makes sense to you.
First one, sound legal environment to protect the interests of the investors, right?
Okay, so the first one is sound legal environment. So why is that important?
Because without a sound legal environment, the interests of the investor will be jeopardized.
Okay.
And usually for international financial centers, they adopt common law instead of continental law.
Okay, that's good. Okay, so if you are the investor and then you want to move your money to the financial center, or maybe through the financial center, you want to make sure that your money will be safe, or maybe in a good hand, right? And then those people who handle your money, you suppose they follow the sound legal systems, the rules, right? So they don't just take your money away overnight, right? So that's important to have the sound legal environment. And I would say Hong Kong is famous for that, and Singapore is really strict, right? In terms of the legal enforcement, right? Okay. And the second thing, what else? Like what popped to your mind? Like what do you think should be the characteristic of a financial center? And why is that?
Education level of the citizens able to speak English as an international language.
Is that necessary?
Yeah, I think so. But somehow for Japanese, they don't really speak English.
Well, they speak kind of English, right? But maybe they are a little bit shy, but they can still do that, right? Okay. But what else? What are the things that's important? Because maybe in the future, maybe your own country, you want to have a financial center, so you need to know what are the attributes of the financial center, so then you can make one. What else?
Infrastructure.
Infrastructure.
Yeah, I don't think India has a good infrastructure, so it's quite hard for Bombay to become a financial center, right?
Okay, so you mean to have the road and bridges
Road,
and
yeah, communication system, transportation system.
mm-hmm. Okay, well that could be part of it. And what else?
Market system.
Market system, yes. Something about market is important.
Mm-hmm.
So we want to make sure the market is functional. right?
Efficient.
Efficiency.
Yeah.
Okay. So wow, I mean that's good term and that's kind of a little bit abstract. So what does it mean to have
Efficient
efficient
means
market?
The information can be immediately reflect in the market, right?
Okay. So let's say that's true. So does that mean China's market is not efficient?
Yeah, somewhat is controlled by the government.
Okay.
Yeah, China is under a socialist system.
So
There are
it-
lots of policies affected by the government.
So are you saying that if the capital market is not controlled by the government, then the market would be efficient?
Somewhat like under classical economic theory,
Mm.
right? We select the market rights. But if you believe the Keynesian theory, you prefer more government control, right?
Mm-hmm. Okay. Well, I like that. Yeah. So I mean, these are something for you to think about.
Mm.
And what about the transparency of the market information?
Mm-hmm.
So, what does it mean, and why is that important?
That means that the listed companies are required to disclose their financial information faithfully,
Favorable,
truthfully.
truthful. Okay.
Yeah.
So let's say South Korea,
Mm.
they have annual report.
Mm-hmm.
So does that make them, transparent?
It really depends on how much information the listed companies are required to disclose in their annual reports.
It depends on what?
How much information they are required to disclose in their reports. Right?
So what if so you're saying that they haven't disclosed enough?
Yeah, I believe so. Compare with other Western countries.
Okay. And what about the rest of the students? So in your country, did you think that the company's annual report, they are transparent?
Everything is transparent because sometimes we have some action to make the annual report, the final will be better in the book, but in the reality is not.
It's not truly reflected real situation.
Some final and will be good in the book and in the annual report and maybe in the actual situation it may be good. Yes.
Okay. Good. Well, this is reality, right? That's what happens. And what about we talk about the efficient market. So what about in Vietnam? Did you think the market is efficient?
I think it's 50-50.
50-50.
Okay. So not 100.
Yes.
Okay. So let's say if Hong Kong, I don't know if Hong Kong is a good example,
Yeah.
but if Hong Kong is 100%, so what about Vietnam?
50 or 60.
I wouldn't say Hong Kong is definitely 100%. I'm just saying that because right now we are talking about Hong Kong.
Comparatively.
Comparatively.
Use that as a benchmark.
Yeah, if we use that as a benchmark, then what do you think the Vietnam efficiency would be?
I think
70%. Okay,
Mm.
fair enough. Okay, so So I think the way we talk about this kind of financial center is we want to know in our country if one day we want to make our capital city as a financial center, what are the required? Okay, and can we have like can we have the Singapore, like city in our own country, right? And how much what it takes to have the Singapore-like city in our own country. Okay, so we can see it's kind of challenging. Okay,
I also miss out taxation.
Taxation.
Low tax rate is one of the essential elements, right?
Is it real? Like, is it
And
binding?
no capital control, no current exchange control, right?
Okay.
These
Yeah.
are quite essential.
Okay. I will link the capital control to the legal system, because if the legal system is good and people protect the human rights, money is your own belongings, then of course you can take in and out of the countries, right? So I think it's something to do with the regulation, right? Okay. So I can tell you something about transparency of the market information is that before the 1997 we know the South Korean, they have experienced some difficulty, right? Like crisis, right?
It's a financial turmoil.
The financial turmoil, and after that they start thinking about the country really need the money from the foreign investors, right? The FDI. So they try to find ways to attract the foreign investors, okay? And the way they can think about is how can we increase our transparency, because that's like a human psychology, right? If you cannot see what's happening inside the country, such as North Korea, no, you won't park your money there, right? So the way the South Korean did is that before they have their own financial reporting system. For example, when you do the books, right? For the accounting purposes, they have their own rules, like South Korean rules. Okay. So what happened is after 1997, they switched. They switched to use the IFRS, International Financial Reporting System. And what happened afterward is the next year, there was a lot of capitals that went into the South Korea. Yeah. The reasons being, when the foreigners they read the annual report from the South Korean, they couldn't understand, because I don't know, maybe it looks nice on your book, but in reality it's actually bad. But then if you are using the IFRS, the same rules that I use, then I will give you I will give you the benefit of doubt, right? I trust you maybe one time and see what happens, right? That's why after the South Korean changed their accounting principles, the money comes in the next year, right? So this is about ways to increase the transparency of the market information, okay? And then the second thing you guys talk about is the market efficiency, okay? I mean, this term first comes from University of Chicago in the United States, okay? And the fundamental principle is that how do you know the market is efficient? It's only if the price you see already reflect all the public available information, okay? But there are some countries, because it's either there is a distance between the knowledge of the people, and also they don't have the financial expertise, right, to understand the numbers, right? That will make the markets less efficient, okay? and also sometimes the government, they have some insider tradings, right? So the government, they actually know what's going on within the state-owned companies. So they can do the trading, but then maybe they can tell you, oh, it's gonna be booming industry, right? But it's actually not true. Okay? In some way, when the insider traders information is there, then the market tend to not reflecting all available information. That's why the market becomes less efficient. Okay? So, but typically, when we talk about the U.S., when we talk about the UK, we think the market tend to be more efficient. Okay? All right. So this is the basic idea. So as long as you don't have people manipulating the markets, the market tend to be more efficient. Okay. So that's the idea. All right. And what else do I want to talk about? Oh, there are so many interesting things. Okay. All right, and then the other one I want to talk about is about something about arbitrage. Okay, we know arbitrage is about pocket the money, right? But I'm saying that in reality, sometimes it's difficult to implement because maybe there's an intervention of the regulations which make this profits not available after the intervention. Okay, for example, when we look at 2007, the Canadian dollar reached and surpassed the parity with the US dollar for the first time since 1976. Okay, and then you can see a growing number of Canadians began embarking on the shopping trek to the United States. Okay, nevertheless, many Canadians learn that engaging in the arbitrage via cross-border shopping is easier in theory than in practice. Okay. So because the US dollar was more expensive and the Canadian dollar was cheaper, so when it becomes 1-to-1, a lot of Canadians, they realize if they go to do the shopping in the United States, everything is very cheap. If they buy like a 4-liter milk, it's only $1 USA, or a little bit, or less than $2, right? So to them, it's a bargain. And then if they want to buy the barbecue beef, right? So we are talking about $4, right? And it's the whole big one, right? And especially I remember that time my friend, they like the Dyson, the vacuums, right? And they went down to the United States, they buy the big ones, right? Which is very powerful, and then when you clean, it's actually very useful when you clean the living room, okay? So so to the Canadian, it's happy hour, okay? So you might think that happy hour will keep going, right? Until maybe the end of the world, but in reality, it did not, okay? So what happened? The government of the Canada and provincial government had the stringent limits on the quantity of U.S. goods and services that shoppers can transport across the borders without paying the sales taxes and other duties. Okay? Because a lot of people, they go down to the U.S. and then bring back a lot of goods. So that there becomes a traffic jam. And the police, they don't like to see that. Because you have the traffic jam from the early morning till the late evening. Even after midnight, you still have the jet lag. That's no good. Okay? So what happened is they impose the limits. Okay? So for example, before you can buy 10 bottles of milk, now you cannot do that anymore. You can only do 1 bottle of the milk. Okay? And then if you want to buy cheese, before you might have like the 2 dozens. Like if you went to the Costco, right? You take the whole thing, but they will just say no. You can only take 1. Okay, and then if you take more than that, they will have to tax you, right? As if you've been taxed in Canada. So all those benefits is gone through the taxation. Okay? So that's the idea. So basically they set the limits on the quantity, how much you can import to Canada. Second, they have to do the taxation on you. Okay? So eventually the long lineup from the early morning to the late evening, even the midnight, disappeared. Okay? Nobody want to do that anymore. Okay? Okay, so therefore, a significant portion of the Canadians learned that the gain from the cross-border arbitrage were much lower than anticipated. Okay? So these things tells you that yes, in reality, there are so many opportunities. Okay? But then it could not last longer. Why? Sometimes that you have the competition, against you, right? For example, when we say before that, there is this money in the street. How come you never see it? That's because someone took the money 1 hour before you see them. So that's why you never see the money, but the money could have been there. That's one thing. Second thing is that any kind of profits that you can take becomes illegal. Okay? Such as, in the capital market we have a term called the insider trader. What does it mean? Means that if Tesla, he knows that he's gonna do the IPO, and then he's got a lot of orders on his robots, maybe from China, from Russia, or from Taiwan. And once he did the IPO, the shares is gonna shoot through a roof. Okay? If he tells his wife, and his wife go on to buy a lot of shares, okay, of those IPO, and becomes another, trillionaire, right? This could happen, okay? Then this is something about insider traders, okay, which is prohibited by law, okay? So insider trader is something that if you work for the company, and then for some reason, for example, you work for TSMC, and then the government of the US is gonna fund the TSMC for a lot of money. So the stock price of TSMC is gonna boom. It's gonna shoot through the roof. Today is Friday. Monday it's gonna go up like crazy. If you know that, and on Friday you purchase a lot of TSMC shares, that is called insider trading. And you cannot do that because there is a penalty on that. Okay? So basically the lesson is that sometimes the money is there, you couldn't get that because you have competitors before you, and sometimes because the regulations, the law, make it prohibitable. Okay, so that's why you can never get to the money eventually. Okay, and you can get to the money, but only small amount of money, never the large one. All right. So this will actually give you a basic idea about the interesting things and fascinating things about the foreign exchange markets. Okay, anyone got any question regarding this part? Good? Okay. So what we do next is we're gonna take a break, about 5 minutes or 10, and then we will move on to the third round of the presentation, okay? And I think last time we have group 1, and today will be group 2, so I think Victor will take the lead, okay? And then since we don't, so the group 1 is still here. So Pooh will be the asking team, to Victor's presentation. All right. Everybody clear about what we're gonna do? Good. All right. So yeah. So we just keep going, and we have, and then we keep rolling group 4 and group 5, and then I think Asha will be ready when it comes to her. Okay, great. Thank you very much. So let's take a break. Okay, and I look forward to your sharing. Awesome. Thank you.